But when I talk to people, and you said this several times, hey, look, the bankers are going to take care of the bankers, not necessarily Main Street. There's a lot of people right now, when you look at inflation, I mean, you do the numbers, people right now, let's say they make 60 grand a year, they're working an extra month this year for free just because of inflation. It's going to pull 5,000, of their disposable income out of their income. So many people feel like, yeah, the central bank, they're not helping me. They're raising rates and inflation's going up. They maybe waited too long. To the average person, what do you do? What do you say to them right now? But hey, it's the banks. Like, how do you fight it?
So how do you fight it? There's a number of ways, right? That you do this, and it's a challenge because the U.S., our nation, had this great um, reserve currency globally, right? We had the reserve currency, and the Federal Reserve was supposed to be a good steward of that, and they squandered it and degraded the dollar as the reserve currency globally. Others are going to, and the good news is other bankers have equally degraded theirs, right? As modern monetary theory or MMT kind of caught vogue in academia, and it's a way to actually print dollars to deflate the assets of the saver and the middle class. And Daniel Ortega when he took over took over Nicaragua, he printed vast amounts of money, 300% of the monetary supply. So any cash saver was destroyed. So he quickly created two tiers, in the economy, right? The super wealthy and the working poor and the poor. And as he did that, people became more reliant on the government, right? And so this is a mechanism by which people become more reliant on the government, and it is something that's been done again and again and again. It's not new, and as they do this, and they use monetary theory as something to control fiscal policy. This is what we just saw happen in the UK, and we can talk more about that. But what happened is we bought a lot of things we couldn't afford, right? We just did. We ran up a big debt in the U.S. for a lot of different reasons, good, bad, indifferent, right? You can say whether it was a good idea for us to spend $8 trillion in Afghanistan or not. It's up to you. Was it a good idea for us to go into Iraq and spend the way that we did? 3.4 trillion, right? These are big numbers. In addition to what we did during COVID, in addition to what we did during TARP. And the interesting thing is, we thought the TARP spending in 8 and 9 was big. Forget that, right? Now, what we did in COVID was huge. So that we have two options. Either we can grow revenue for the government, right, which is tax more, or grow the economy, or this is 30 plus year paper. You can deflate the asset and devalue the dollar, so that over time you're making your debt service manageable. And when you look at the levers that the central bank is using in monetary policy for the government to help manage their own operations, uh, when we made the choice after QE, the third vote for QE is when it went to QE as an emergency measure. We couldn't lower rates anymore. We had to do this new thing, QE. We're going to explode the balance sheet of the Fed. At that point, after the third vote, literally, you had a change in decision making that we're going to change the role of the Fed in the US economy and the US Republic, right? And this is a big deal. And so we have to understand that the Fed grew in importance to the US economy and the US economy's reliance on it. And rather than take the medicine that we needed to, that we gave ourselves these sugar highs, to keep us propped up, propped up, propped up. And a couple different times they tried to kind of wean themselves off, but the economy got addicted to it, and they were unwilling to experience any downturn in the market. And so we now need to wean ourselves off. And the way that we're going to wean ourselves off is going to hurt the banks a little bit. But what it's really going to do is, through inflation, it devalues the dollar. It makes it harder for the middle class. And this is something where monetary policy, people need to understand monetary policy has put more power into the government, more reliance on the government, and taken away freedom from individuals to be the primary agent of change in their own life, right? And this is something that we are. This is the reason crypto was created, right, as alternative, but also these DeFi structures and these new mechanisms to store value. And you can store value where you can literally get in and buy and trade real estate, where you have mechanisms, where you have better data so that you can instantaneously trade this. And to the degree that you're going to be able to have a store of value, that is an office building in Midtown Manhattan, a multifamily housing unit, or student housing here, outside NDSU, or we're talking about an infrastructure asset like a port, where you're going to be able to understand the state of that asset, have a third party value that asset, somebody like Apex, who has 3 trillion under administration, but they're going to go to 10, so not under management.
Sorry, under administration. Right? Thank you. Yes.
That they're going to grow that literally they can set the NAV on that so that you can buy and sell. So you have new mechanisms to store your value. And as you do that, what you're going to see is the market itself, individuals are going to, instead of investing in just the largest of large companies, they're going to be able to support local economies, right? And there were over 200 exchanges 100 years ago, right? Everybody had an exchange. San Antonio had an exchange. Denver had an exchange. Seattle had one. Spokane, Portland, Minneapolis. And you had certain thresholds to be listed on there. But people, when they bought public companies, they were buying public companies that they themselves patronized, and they knew the owners, they knew the employees, they knew the shareholders. As there was a consolidation of exchanges, there was a consolidation in companies buying others up so you could meet the threshold so you could still stay public. So today, even though the dollar amount, the size of the public markets is huge, as compared to the whole U.S. economy, the number, we have about 12 to 15%. And my number is a little bit old. That's why I'm upsizing myself to 12.5% of the number of public companies has existed 100 years ago. Think about that. That's amazing. And so what we're doing is we create mechanisms for people to invest in private assets more easily with real-time data, with observability and third-party marks. People are going to be able to store value in businesses around them. And that's going to open up new mechanisms of financing for the small developer, the small business owner. And that's what DeFi, and that's what coming out of crypto, and that's what better data married up with DeFi along these blockchain rails is making a reality for small borrowers. And so what we're doing is we're seeing mechanisms to create economic opportunity for this middle class, for the small business owner, for the asset owner, for the saver, where you're not just in a single set of assets or in markets that can be so swayed dramatically by the Fed. Does that make sense?
Yes. Pat O'Meara, CEO and chairman of Invenium. If you want to find out more about what they're doing to evolutionize private market asset data, go check out Invenium.io, Invenium.io. Hopefully we'll